off with let me introduce some of the teams that we are focusing on. So first off, the first team that we like to focus on in second half 2025 would be the basically the acceleration in infrastructure spending in Malaysia, and basically as Malaysia experiences a surge in the growth investments, that there is a need for increased infrastructure spending to basically upgrade our transportation networks, public services that are essential to basically support this growth in economic activities. And then in terms of, in the table below, I have highlighted some of the major infrastructure projects pipeline that, that is known to the public. And then within this list, there are a few that I'll be more actively, tracking on, that includes, the major infrastructure projects in Penang and Johor, as, they set to accelerate from the increase in FDI. Basically, some of the key infrastructure projects that we are tracking include the Penang RT. So actually, the first segment, which is basically one of the civil work package, has already been awarded in early of the year. But then for the overall, design, that there is still another two component that would be awarded later on in the second half and early next year. Basically for the segment 2, they are planning to open up the tender is already open, and then basically I think the tender finalization is expected in the second half of the year. And then there's also Penang International Airport expansion, one of the biggest package that is has an estimated value of about 1.5 billion. And then there's also in the Johor side, as a Johor elevated automated rail trackway with an estimated 7 billion value. In terms of the tender, it is expected to be called in second half of the year as well. And basically, these projects are expected to improve connectivity, basically boost the increase the traffic, basically to cater for the increase in traffic demand driven by the growing industrial sectors. And then there's also a growing focus into looking into large-scale water treatment projects to basically address the nation's water security issue, to basically balance out, as all the industrial investments come in. And then some of the key water infrastructure projects that we're tracking include Sabah, a water treatment plant in Sabah called Upper Pada's water supply scheme, 4 billion in estimated value, and another one in Sungai Perak, about 2 to 4 billion estimated value. And then moving on, another key themes that we continue to track is the expanding data center investments in Malaysia. So basically, Malaysia has attracted more than 230 billion in committed investments from several key data center operators such as your Amazon, your Yonder, Microsoft, Google, etc. And basically with a combined 4 gigawatt capacity in terms of the committed investment pipeline. And then, but nevertheless, in first half, there were definitely some uncertainty regarding the expansion plan, as the previous US Biden administration has introduced basically an AI Diffusion Act that's set to basically restrict the export of AI chip into several Malaysia and several other countries. But then with the recent rollback of the AI Diffusion Act, we see that this has basically removed a key overhang for the sector, allowing all these tech giants to resume their expansion plan in Malaysia. So we basically expect the 4 giga pipeline of DC to remain on track, basically supporting a multi-year growth across the value chain of your contractors, developers, and also all the equipment, those involved in the equipment value chain. And then based on our compilation, all these DC operators have already collectively acquired a total of 1,458 acres of land bank in Malaysia, which we basically estimate, I mean the list I'll be showing on later on in another slide. And then basically we estimate that based on this, this huge land bank of 1,458 acres, we see potential for them to basically develop up to 3.7 gigawatt based on this land bank. And then basically for 2024, all the DC related job flows definitely underpin some of the sector's performance in such as your construction nowadays, with 7.9 billion worth of contracts awarded in 2024. And then in first half of 2025, despite the uncertainties over the US chip policy, there was still about 4.2 billion worth of contracts awarded, and basically signaling a sustained momentum in the DC space in Malaysia. And then with the increased standard activities that we have gathered from some of the industry players, we expect all the job awards momentum to basically accelerate in second half 2025. Okay, so the coming some of the slides regarding the information that I've shared just now. This is on the land bank from the developers that have secured all the land in Malaysia, and basically we see that there are about 1,458 acres of land already collected by these DC operators. So basically it's just a matter of time of them rolling out all this the data center build out, and also trying to find a balance between the data center growth and also the actual monetization of them. Yep. And then this is the list of the DC related data center related contract awards in 2024, covering basically benefiting several companies such as your Maincon, Suncon, Gamuda, IJM, Inastra, and then it also benefit some of the utilities infrastructure players. Essentially, those are the contractors that build the substations, and also the underground transmission line that connects the grid to the data centers. And this include your land holdings, Jati Tinggi, and then there are also several smaller players that are involved in certain specific work scope of the construction, or certain they supply certain equipment, such as your switchgear, others, your power well. Okay. And then this is the list of data center related contracts that we have compiled, basically that have been rolled out in the first half of 2025. Basically we still see some of the recurring beneficiaries such as your MN, Suncon, Gamuda, that basically continue to secure jobs from all these data center rollout. And then moving on, we would like to highlight another theme that we have been actively promoting since a while back then, which is the local RE push lah, basically. So basically Malaysia's RE sectors is set to enter a multi-year earnings upcycle, supported by the continuous policy push from the government to basically accelerate capacity expansion for the renewable energy to basically make up 70% of the nation's installed energy capacity by 2050. And then some of the initiatives include your net energy metering, large scale solar LSS, CGPP, CRES, and also a newer version of the rooftop solar scheme, which is called CREAM. And these are basically dish out to broaden market participation for industrial, residential, or across the nation. And basically what we like to highlight would be the upcoming rollout of the large scale solar, basically LSS 5 plus, and LSS 6. And basically we expect each of this program to have a 2 gigawatt of total quota. So essentially, this 3 program total up would be about 6 gigawatt to be rolled out. And then basically for the beneficiary, we would like to we would prefer exposure in some of the EPCC contractor, as all these programs roll out are set to provide about 18 to 20 billion worth of EPCC contracting opportunities for these players, providing a strong visibility and also a multi-year earnings catalyst for the sector. And then basically, we would like to highlight the chart that this is the kind of RE renewable energy related quota that has been rolled out by the Malaysia government, and basically you can see that each cycle tends to get larger and larger as we try to achieve the goal of 70% of the nation's installed capacity by 2050. And notably, the renewable energy sector in Malaysia, which I highlighted, the EPCC players, we see that they're largely shielded from the ongoing global trade and tariff headwinds, as basically as the US and China go into this trade related uh, conflict where US tend to restrict the import of China produced solar modules. Basically, with that, the China players have to basically divert their supplies to other part of the world, and that basically benefit Malaysia, as we get to benefit from the excess of supply of solar module. And for Malaysia, we are mainly the main players here are mainly the EPC contractors. So basically, with a low solar module price, it would be a low input cost for them, and essentially they can manage better project margin by building all these large scale solar farms. And then those three are the key themes that we highlight. And then now we like to go into some of the key sector overview, and then start off with the construction sector first. So basically for the construction sectors, the subheader here over basically highlights the overall tone of the industry right now, as all the contractors would be securing data center related contracts first, while waiting for all these infrastructure projects to actually roll out and benefit overall the overall sector. And basically, yeah, the data center related contracts are expected to drive order book growth for the sectors. And then based on what we estimate, there are about still 3 gigawatt in new capacity asset to create about 35 to 45 billion construction related opportunities over the next 5 to 10 years for the contractors. And in terms of the infrastructure side, as I highlighted before, some of the key infrastructure projects we expect better news flow in second half include Penang LRT, the second segment, and then also Johor EART, Penang International Airport. And then as highlighted previously as well, the rising water requirements from all the new industrial investments, your new data center investments have also accelerated the need to invest in which will basically improve the Malaysia's water infrastructure. And as part of these are basically funded by the DC operators to basically expedite their approval and building up that DC in Malaysia. And in terms of the beneficiary, we'd like to highlight maybe some of the contractors with both infrastructure and data center track record. And then one of the key, large cap top pick that stand out for this would be Gamuda. And then basically we like to reiterate our overweight call on the construction sector as we anticipate the sector to benefit from the rollout of infrastructure projects, the data center investments, and also some of the players here would benefit from the consistent contract rollout from the resilient property market. And then for our side, within our coverage, our top sector buys are actually Gamuda and Binastra, given the strong position that they hold in the respective construction subsectors of infrastructure and also building construction, and with both have strong order book growth prospects. And then in terms of our coverage, Binastra and Kejaya stands out with a below sector mean forward PE of about basically they're both trading at about 12 times PE, well below the sector average of 15 times. But their order prospects remain well supported by their key clients, growing property launch pipeline in some of the prospering property market in Penang and Johor. And then basically our small mid cap topic is Binastra. who stand out as a preferred contractor to ride onto growth of some of the prominent developers such as Maxim, Platinum Victory in Malaysia. And then we also have a buy on AME Elite. Basically, they offer a unique exposure to capture the influx of FDIs that will be supported by the JSSEZ between as they basically focus on in developing industrial parks in Johor as well as Penang side. But for some of the stock highlight that we'll be doing would be more on Gamuda and Astra later. So yep, I'll start off with the basically a bit more details on the Binastra. So basically, Binastra, their core strength lies in the long-standing relationship with three prominent clients that are namely Maxim and Platinum Victory. And basically, what is the near-term catalyst will be coming from their clients' project pipeline in Johor that basically total about 6 to 7 billion from Maxim and Maxim over the next 2 years, and that will basically translate to about 4 billion worth of construction opportunities for Binastra. And essentially, uh, uh, yeah, uh, we expect them to record a 3-year profit CAGR of 36%. And then in terms of their project portfolio, Binastra is also actively expanding into DC data center related jobs with 3 ongoing data center construction jobs for AIMS and also one of their main client, Exim. And then basically this track record opens up opportunities for them to take on more data center related construction job as well, basically helping them to get a slice of the pie from the growing data center investment. And then Binastra is also in the midst of acquiring a 51% stake in LF Lanson. Basically, LF Lanson specialize in excuse me, specialize in engineering of thermal energy storage and also some of the AC&B systems see in M&E supply chain. And basically, this acquisition set to expand Binastra's service capabilities and also improve its competitiveness in bidding for DC projects. So basically, we are forecasting quite a we're foreseeing quite a strong order book growth for Binastra, given that they are given their strong relationship with the clients and basically we expect strong order book growth for them as they essentially go from 3.5 billion last year to 5 billion and 6 billion in the year ahead. And then in terms of valuation, Binastra is still trading at an undemanding about 12 times for PE, and that's well below the sector average of 15 times. And then basically with their strong portfolio of projects, we see opportunity for valuation to continue to re-rate. And then moving on, there's okay, we will go into a bit more details on Gamuda. So basically, we like Gamudas for their regional exposure in both construction and property. And basically, from the table on the bottom right, they have about 35 billion worth of order book and it's well diversified across several key markets such as Malaysia, Australia, Taiwan, and Singapore. And basically, these are mainly projects uh, revolving infrastructure, renewable, and also DC. And basically, they have a very well diversified order book already. And then basically, they're targeting to continue to grow the order book and basically to achieve order book level of 40 to 45 billion ringgit by end of the year. And that will basically supported by some of the near-term opportunities amounting to 24 billion from both overseas and local infrastructure projects, as well as some of the potential DC project pipeline from one of its existing data center client. And then basically the Gamuda has recently secured a deal that basically sell off about 380 89 acre of land to one of his key data center client in the Greece and Milan, and basically we estimate that that piece of that parcel of land is basically capable of basically unlock 15 to 20 billion worth of data center construction job opportunities for the group over the next 5 to 10 years. And then we basically continue to like them for their growing exposure in the DC and cloud infrastructure side. And then moving on, we would like to go into the highlight for some of the for the industrial sector. And basically for the industrial sector, our key focus remains on the data center investments, as Malaysia has attracted sizable amount of DC investment thanks to their favorable conditions such as friendly government policies, and also availability of land and power, as well as strategic location that basically benefit all the DC operators to set up here with relatively cheap in cost, and also availability of all the resources. And then as I highlighted before, we see a committed pipeline of about 4 gigawatt from all these DC investments, and that will basically unlock about 230 billion worth of investments in next 5 to 10 years. And then as highlighted before as well, the removal of the previous AI chip export restrictions basically enable increased tender activities for the DC sector, and we expect the data center related contract awards to accelerate in momentum in second half of the year. And then for the sector topics, we have we like to highlight on MN and so critical holdings. We'll go into a bit more details later on. And then basically for the industrial sector, what basically set apart the industrial sector and the construction sector is that our industrial sector highlights more on some of the smaller smaller M&E contractors, such as our critical HE, which set to benefit from the M&E contract awards that typically come after the main con secure the total overall package. This is similar to the trend that we see in the recent award of some of the M&E packages from the Google phase 1. And basically the main con package was rolled out last year after a year over, and then they start to roll out the M&E package. So basically we expect a similar trend from other data center projects, as well as there were several, and as I highlighted before, there were about 7.9 billion worth of contract rollouts in 2024, and we basically expect the M&E related packages to set to roll out in this year. And then basically some of the M&E contractors that we like to highlight would be critical and HE. And then apart from the M&E contractors, we would like to highlight the infrastructure utilities engineers as well. And basically there is MN, which set to benefit from the surging energy demand from all these data centers. And then basically the TMB is expected to increase the capex to strengthen the Malaysia's overall utility infrastructure grid network by upgrading our power substations, transmission lines, the distribution networks, and etc., to basically accommodate the rising energy demand from all these data centers investments, as well as industrial investments. And they also stand to benefit from some of the direct job exposure from some of the solar players, as well as direct job exposure from data center operator as well. And then for the industrial sector, yep, as I highlighted before, the similar charts that I prepared just now. So just in case some of you might have missed it, can hello. And then yep, a bit more details on critical. So basically, critical holdings, they specialize in mechanical, electrical, and process utility solutions, and basically and also maintenance for essential facilities such as plant rooms, clean rooms, and some of the data center. And then they're basically strategic, well positioned to capitalize on the next semicon upcycle, and also benefit from the surge in data center investments in Malaysia, driven by the rising demand for AI applications, as well as they set to benefit from the ongoing trade diversion, with more MNCs relocating their supply chains to Penang, basically boosting the demand for this kind of M&E solutions. And then in terms of the order book, they stands about 280 million, the record high for the group, as they recently secured some large scale projects, driving on the growing semicon and also DC opportunities. And then basically for that tender book, they are standing about 1 billion, and then there's 60% in semicon and 40% in data center. And then for a little bit more details on MN. So as I highlighted previously, basically we like MN as a MN Holdings as a proxy for Malaysia's expanding power infrastructure, and also they have a strict direct exposure in the rapid growing DC data center and also solar sectors, as well as so what the data center will engage them to basically to help and build some of the internal substation that will be linked to the TMB grid, as well as they would benefit from the solar sectors, as they build some of the substations and transmission line for the solar farms as well. So basically that they have a strong three key pillar for them to replenish their projects, basically through TMB, solar, your DC, and then you can take a look at the breakdown in terms of their current 1.1 billion order book. Currently more than half of it is in data center, but then and there's about 37% in TMB related projects, and about the solar sectors is about 2%, but then we expect as the LSS 5 roll out in this year, and then moving on in after 6 to 12 months, we expect that there would be increase in all these substation related work roll out, basically for them to build the substation at all the solar farms at LSS 5, LSS 5 plus. And basically we remain positive on their replenishment prospects, as unpinned before, as I highlighted before, benefiting from the three key pillars, and then basically they have about 1.9 billion in tender book. And all in all, we are overall forecasting a 3-year profit CAGR of 50% for the group over FY24 to FY27, driven by the robust contract pipeline from the DC, TMB, as well as solar. Okay, moving on, we'd like to highlight a bit more on the renewable sector. So as I highlighted before, we are very actively tracking the upcoming rollout of the large scale solar programs, which include LSS 5 and also the newly introduced LSS 5 Plus, which we will expect the the quota award to happen in the next few weeks, or basically in the next within June and July. And then moving forward, we also expect the SS6 to start calling for tender in second half as well. And basically with all these three programs, we are seeing about 6 gigawatt in quota, and that will basically represent about 18 to 20 billion in EPCC contract opportunities over the next 2 years. And then we also see, increased adoption for the trust program as to gain momentum with the recent increase in TMB electricity tariff. Basically, we expect the high energy consumption sectors such as DCs to basically, start basically start, increase their adoption of the CREST program, which as they try to, offset their carbon the carbon footprint. And then in terms of some of the quota for the residential and commercial industry as well, then the authorities have been consistently adding quota under NEM 3.0 that basically support the rooftop solar installation. And as I mentioned before, the key preferred exposure that we would like to highlight would be the EPCC contractors with strong execution track record. And within our coverage, we would like to highlight, Pekat, BM Green, as well as Solar West. We'll go into a bit more details on these three companies later on. And then basically some of the charts down here is to basically show that, for Malaysia, basically for us to reach the 50% RE install capacity in by 2050, solar is definitely going to take a big chunk of it. Essentially, a forecast that 58% of it will come from solar. And then, in terms of the IE opportunities in Malaysia, basically this solar would definitely still would have a bigger chunk of it. And then basically, yeah, to highlight again, for the LSS program, Solar West stand as the prime proxy, basically due to their strong market share in previous cycles of LSS and also CGPP, with more than 30% of overall, the overall market. Meanwhile, some of the players like Pekat and BM Green are also trying to grow their presence in this segment. And then for Pekat and BM Green, they have higher exposure in residential and CNI rooftop solar, which set to benefit from the increasing quota under NEM 3.0. And then some of the recent updates for Pekat will include that recent strategic acquisition of a switchgear company called EPA Switchgear, and that basically opened up opportunity for them to ride on TMB's infrastructure upgrade capex. As you know, the EPA Switchgear basically their main client is definitely TMB with an estimated market share of 30% in the TMB switchgear medium voltage market as well. And then in terms of the BM Green, they stand as a leading player in biomass EPCC as well in the Southeast Asian region. And basically they are well positioned to ride on the overall decarbonization efforts in the region by basically offering biomass boiler EPCC as well as the solar EPCC. And basically, we overweight on the RE sector as we anticipate the sector to basically ride along Malaysia's RE ambitions outlined in the NETR. And then in terms of sector earnings growth, we expect Solar West and Pekat to stand out this year, basically with a 55% earnings growth and 85% earnings growth expected for this year and 20% in next year. Now I'll go into a bit more details on BM Green. So as I briefly mentioned just now, they are a prominent IE player by offering sustainable energy solutions through bioenergy EPCC, solar EPCC, as well as some of the water treatment related engineering engineering expertise as well. And then basically they send out as a market leader in the EPCC of biomass boilers in Southeast Asia. And basically for their solar side, they have recently acquired a company called Plus X Energy. And with that, with that acquisition, basically it strengthened their presence in the solar IPCC market by engaging more actively in government-related solar initiatives such as NEM, CGPP, and also LSS projects. In terms of earnings growth, we forecast a net profit CAGR of about 11%, driven by the well-diversified business pillars of their bioenergy, solar, as well as the water treatment side. Okay, move on to solar. Solar West. So as I briefly mentioned just now as well, we basically like Solar West for their leading position in the solar renewable space and being a prime beneficiary of the nation's energy transition goal due to their strong market share in the ISS program. And that basically set them as a prime proxy for the upcoming 18 to 10 billion worth of EPC contract rollout from the ISS programs, as I highlighted before, from LSS 5, LSS 5 plus, LSS 6. And then in terms of the LSS, in terms of their market share, in LSS 5, they have already secured about 30% market share through both EPCC and also some asset ownership opportunities. But there are still remaining contract that are still yet to be rolled out, and the management basically remain active in bidding for these new projects. So we do see that opportunity for them to basically secure more than 30% in the SS5 projects. Essentially, there's potential for them to reach 40 to 50%. And then with their strong market share and also the strong pipeline of LSS projects coming, that we are expecting to be rolled out in the next 1 to 2 years, we are basically forecasting a 3-year profit CAGR of 20% over FY 24 to 27. And then a bit more details on Pekat. So basically, Pekat is well positioned to ride on Malaysia's RE initiative through the solar segment, and then also ride on the TMB infrastructure upgrades, as I previously mentioned before. The surge in power demand basically require TMB to basically accelerate their investments in the grid infrastructure, and through their recent acquisition in the switchgear company that I mentioned before, basically it opens up opportunity for them to ride on the TMB infrastructure upgrade capex. And basically they also have another segment called Earth and Lightning Protection Division. Basically that division supply and install some earth and lightning protection equipment to some of the industrial commercial sectors, and basically that their earth and lightning protection products have been gaining strong market share in the DC sectors as well. With basically we see that they are one of the beneficiary in the surge in data center investments as well. So with all that, we are basically forecasting a profit CAGR of about 35% over the next 3 years, driven by the synergy leverage among its business pillars that present promising replenishment prospects for the overall group. And then, okay. That's basically my presentation. And then I think now we can move on to some of the Q&A. Okay, there's a question from Mark Chan that basically asks about what about other EPCC and substation contractor like MN. Yeah, so basically MN and critical, as I highlighted previously, they are one of our sector topics for the industrial DC sector. And then in terms of the IJM, definitely they stand as one of the key beneficiary as a main con as well. As I highlighted in the list before, they are one of the, they secure some of the DC project as well. But unfortunately, I'm not covering IGM at the current moment, so I can't really give too much of you know, uh, recommendation for them. And then in terms of the building material players, unfortunately, I'm not covering the building material sector as well. So yeah, I can't really give recommendation on that. And then I think there's a question that asked me any specific reason why I dropped Smiden in my research. I've never covered Smiden before actually. And basically for the renewable sector, we only cover the three stocks that I have highlighted just now, basically Pekat, Solaris, and PM Green. I have never covered Smiden before, so maybe you might have been confused. Yeah. There's no opportunities in job or the strong sector. I think there's a question from Raymond Lai. I'm not sure if I pronounce your name correctly. I do apologize if I pronounce incorrectly. So there's a question on, I noticed there's no RE opportunities in Johor with all the strong power requirements from the data centers in Johor. Why is that? I think it has something to do with the balancing in terms of the land cost as well. You know, the Johor side that have been benefiting from all the industrial, that the land cost is definitely way higher than some of the you know more remote area in the northern region, and it definitely makes more sense for them to basically build this large scale solar farms in the northern region, and then basically transmit it through the grid. So basically from there, we can see that the land cost in the northern, some of the more remote area in northern, like your Perak, all this have cheap I have cheaper land, and then basically all the uh solar farms are built there. So basically, to transmit the power and basically to cater for the strong the upcoming pipeline of all the solar farm, basically the TMA grid would definitely need some sort of upgrade. So once again, we reiterate that the TMB upgrade capex team is one of the key investment angle that we would like to highlight as well. Uh, Benefiting from the surging power demand as well as the upcoming solar farm like. Okay, I think there's a question regarding how would the contractors' earnings be affected by the recent introduction of 8% SST announced by the government. So basically, for similar understanding, for the 8% SST, the residential side is exempted. And then for some of the main contractors players like your Gamuda and Suncon, actually their contract with the government is actually exempted from the SST as well. And then in terms of some of the private sector jobs, uh, both of their contract actually includes a clause that basically enable them to pass on this additional tax to the end client. Basically there's a clause regarding change in tax or tax related law or something, and basically that would essentially enable them to review their contract and pass on the additional SST to the end client. So we expect that the earnings of these contractors to basically remain unimpacted from the 8% SST. Okay. Okay, I think there's a question on the Johor Singapore SCZ, whether it is expected to have any major boost to the sector. And basically, basically for that we see that the construction sector as well as the industrial sector set to benefit from that, and as well as the property sector as well. Basically the increase in all these industrial investments in the Johor area set to basically drive a stronger economic activities in the Johor side. Definitely it would first benefit the property players, that basically build the industrial parks, as well as to the residential property players, as well as the increase in population in the area is definitely going to increase the demand for property. And then in terms of the industrial sector, we see that they set to benefit from the influx of all the FDI inflow, and basically the industrial projects construction would also benefit the construction sector as well. Concentration there. Okay. Then I think majority of the questions in the Q&A are still regarding some of the stocks that I'm not covering, and unfortunately for the stocks that I'm not covering, it's better for me not to give too much of recommendation. So I think that's all from our side. Maybe Marino, you can wrap up the session. Yeah.
Thank you very much, Cajun. Okay, so we come to an end of the webinar today, and I would like to thank everyone for attending, and also for Cajun's informative presentation, as well as the interactive Q&A session. So for tomorrow, Tuesday, we have our Japan analyst, Tomoyuki Misumi, to share the outlook and stock pick for the Japan market. Remember to mark your calendar and join us tomorrow at 1 p.m. For the session just now, we will be uploading the recording on PhillipCapital's YouTube channel. You may view the recording of the webinar on your own time. Do take your time to fill in the survey so we can improve your experience with us in the future. You may scan the QR code shown on the screen. Once again, thank you all for joining us today, and we hope to see you tomorrow. Stay tuned, take care, and have a nice day.